In this market, man. So I mean, I'm excited for the show. I think we've been holding out on the people.
Holding out. Here on episode 31 of the Block to Block podcast, the best podcast in the world for all things Web3. Here we break down the technology, what's going on in the market, and the ways in which you can benefit. I am NFT and Jai,
And I am Web3 Wayne.
and over here, the talk is different.
Always different. And with that different talk, we gotta give the different disclaimer. So
Mm.
this podcast is for informational purposes only. Do not use this podcast to make financial decisions because we will not be liable if you lose your cheese, cheddar, mozzarella, or provolone. So, with that, make sure that you consult a financial advisor or any other financial professional before making any financial decisions that can affect you or your family. And with that, let's get the podcast started. So
Woo!
31.
31, 31 weeks of back to back fire, man.
Yep. 31, and this is a dirty one, man, because we
Mm.
we got we gotta talk about some serious things. We gotta get into it today.
Yeah. We would have talked about it last week, but we had our esteemed guest Alyssa Gill on, who was able to speak about how to become a marketer within Web3. So if
Yep.
you haven't already, make sure to check out episode 30, whether it is on here on YouTube or on our audio platforms such as Spotify, Apple Podcasts, iHeartRadio, or Google Podcasts. Alyssa dropped a lot of gems. Like
Dope episode. Dope episode.
one of my favorite.
Listen, we need y'all to make the episode go crazy. Go in, tell us what your favorite part of it is, because I think she might have doubted how great her episode was. Like I was on there like asking questions, not because I knew what was going on, because I was really like, oh, this is a gem right here. Hold on, let me go see what's going on. Let
Yeah,
me
let's scoop this joint up real quick, right?
right,
But shout
right.
out to Alyssa, great
Shout out.
marketer, great colleague, and she really dropped a lot of gems. But nonetheless, so that's why last week we wasn't able to talk about what was occurring within the market regarding the bank collapses that we've seen in the month of March. However, we wanted to use today's episode to do so. And so, as we all know by now, or what we may know by now, is this month has been crazy when it comes to the financial institution sector. So, three banks have all failed roughly within a week of each other, right? And we're just going to dig into the reason why these failures have occurred and just what are the main implications for you, especially in this context of Web3. So the three banks that we've seen fall within the month of March was first Silvergate Bank, which Web3 Wayne here talked about briefly with his quick take on episode 29. So check that one out. Then we saw the collapse of Silicon Valley Bank within a few days afterwards, or otherwise known as SVB. And then within 48 hours of that, we've seen the failure of Signature Bank. So the three S's, three banks all failed, and it was due to the common reason of a bank run had occurred. And it's a concept that we talked about earlier, but a bank run is essentially when the depositors or the ones who hold their money within these bank accounts, they act fearful for whatever reason. And so they all within big groups start withdrawing the money at all at once. So imagine if you're a bank and you have like 1,000 customers and all 1,000 of their customers say, we want to withdraw all our money right now. That is very problematic, especially if you know how banking works in terms of they don't necessarily have all those funds within the account at that time, right? As soon as you put in your money to a bank account, these institutions typically take some of that money, loan it out in order for them to make more money. And so for them,
Well, yeah. I mean that's even more so the regional banks.
yeah,
They have a little less of the regulation on them, so they were participating in that fractional banking that you're talking about. So they're
yep.
loaning it out, they're using it to invest, all these other things um, that were a bit more risque. But I diverge. I diverge. Continue
Yeah,
on.
yeah,
Sorry.
yeah. No, that was great context. Great context. So as you can see, it's very problematic. And let's get into the reason for the bank run, right? And in order to understand that, you have to kind of take a big macro look view of what's happening in the economy right now. We're in a recession, whether or not they announce it officially. These are recessionary times. We've have been experiencing record high inflation rates, and as a means to combat inflation, as we talked about in previous episodes, the Fed, or the central bank of this country, they're going to raise up interest rates as a means to help combat inflation and try to get the economy back on track. And in doing so, whenever we're in an environment when inflation rates are much higher, things such as the more speculative or high growth, aka high risky asset classes, tend to do bad or underperform. So oftentimes during these environments, we see the tech industry as a whole not perform as they typically do. They underperform a bit. And then speculative risky assets such as crypto doesn't do well either, which we've
Mhm.
talked about a lot in like previous episodes. And as this relate back to these three banks, Silvergate Bank was known for investing heavily in crypto projects or Web3 projects. SVB, or Silicon Valley Bank, as you can tell by the name, based in Silicon Valley, they focus mostly on the startup or venture capital ecosystem.
Wasn't the only thing, but definitely the main focus. Wasn't
One
the
of the
only
main
thing.
focuses.
Yeah.
And then Signature Bank was a combination of the both, right? Like crypto, Web3, startups, what have you. So, what's cool about these groups with like Web3 and crypto and startups is, they do have high growth potential, but they're extremely risky. And in an environment when we're seeing high interest rates, these types of organizations just aren't going to be doing well. And so what we have is a combination of a lot of these startups, a lot of these projects making smaller deposits within the bank, and then but having like higher withdrawal requests in general. And so it was like just a result where some of these banks had to liquidate some of their back assets just to trying to make up the difference, and they was liquidating at a loss, right? And so overall it was just the perfect storm of the overall recessionary environments, high interest rates, everybody, depositors not putting in as much money as before but taking more out, and then just not having enough capital to really handle these concerns. And so we just saw a chain of events when bank runs started to happen. Beca- Bless you, Web3 Wayne. He sneezed, y'all, but he put himself on mute. Damn.
Yeah.
Back to 2015 with it. But we were seeing a situation where, Silvergate was the first to fall because of like really that FTX contagion that happened that we talked about before. And then SVB followed afterwards. And then with what was happening with SVB, that set a domino effect of what happened with Signature. And so this is what we talk about with contagions, right? Like things being contagious of this volatile market activity. And yeah, it just was unfortunately a series of things that led to the perfect storm. But with all that context out the way, the big question is, what does this mean for the overall economy?
Yeah, and I think that's a great question to get into because I think that's what most of us want to know. It's like, all right, so like all of these things happen, but what does that really mean? When you say contagion, you know, of course, Silvergate, SVB, Signature, okay, like those banks were investing in risky assets. So of course, they would be susceptible to the collapse or the hardships that they're going through. But what does that mean for everybody else? And there is no easy answer around it, right? There's no way to really predict the future. But what we do see is like NFT and Jai mentioned, we're seeing those investors, we're seeing even depositors starting to look more heavily at those businesses, at those banks, right? They're scrutinizing those balance sheets, they're scrutinizing the news clippings, they're doing that at, a heavier clip, right? And that's even something that we've seen with Credit Suisse, right? The reason for the troubles that they've had is, they've had a couple bad moves that they've made. Of course, they've ended up in the news for those things, and now we're seeing, the result of that, right? And so, the Fed has done some interesting things to try to really combat the bank runs and assure those patrons that, hey, your money is safe. Although the FDIC doesn't cover everything, we're going to create some backstops. They've done some things like created lending programs for banks, things like that, to kind of help create a bridge to get through these times and create some assurances. But still, that this is a tough economic period, and this is a tough economic environment that's only going to get tougher. And that's really what we see in terms of that bank run is people are signaling, hey, we see what's going on. We need to really see if there's anything that can result in us not being able to get our money, retrieve our money. We need to be out of there. We need to be gone. Get up and get out. Right. And so, what does that mean for the larger macro, economic environment? With the Feds raising rates, it's not looking pretty. It's not looking pretty at all. And the Feds raised the rates yesterday, another 25 basis points. And so what that means is really what the Fed is trying to achieve is contracting the economy, right? They want to slow down a lot of the lending. They want to slow down a lot of the money that's being injected into the economy, and really just get a handle on inflation, right? And so you couple that with what's going on, and we can see a few things that can happen, right? So an economic downturn is something that's very plausible, and really the way that things have been going, we're on that path right now. Not to be a pessimist in these times, but we just have to be truthful about what we're looking at, right? And so what that means from just getting financing, and what does that mean on the bank side if you're a business owner or whatever. um, that means that there's going to be a lot of reduction in investment and consumption, right? So there's not going to be as much lending in terms of credit. That won't be as available. You won't see as many people spending, right? In these times, people tend to save. They're really at a point right now where you don't know what's going to happen. So your regular day person isn't going to go out and just spend haphazardly. They're going to save for tough times that may be ahead. Of course, what we've seen already happen can continue on, and that's a chain reaction, right? We can see one bank cause other banks to also start to go down that slippery slope, go down that slippery slope. So your asset prices start to decline, and it's just there's more panic that arises. So really just chaos begets chaos, right? So one bank going into a chaotic moment can lead to other banks, again, their patrons saying, hey, what is the risk here, right? And if there's anything that's not to their liking, then that can cause them to leave. And if they sound any alarms, they can cause other people to also take their money and run away. But that can also lead to the fact that government may have to intervene, right? And that may sound like a good idea, it may sound like the right move, but then we also have to remember that the government has a budget that they're working on. So if they're spending money on, you know, backstopping banks and making sure depositors are made whole, then money has to come from somewhere, right? So a lot of the other programs that we're seeing, um, maybe even our student loan forgiveness that I'm still waiting on, we may see that go away because the government has to put that money somewhere else, right? So all in all, this leads to the economy contracting. We're not going to see as much cash flow, right? We were in a period of easy money. I mean, money was flowing everywhere. People was out here, basically just shooting craps with the economy, for lack of a better term. And so what we're seeing now is the opposite, right? Everybody's like, hold up, let me take a step back. Let me get my finances in order. um, and so, in a macroeconomic sense, one thing to really look at is the Fed moving forward, right? What's going on there? They'll probably continue to raise rates until inflation is under control. But that's a good time to again start signaling, okay, hey, we might be moving out of these recessionary times, these contracting economic contraction times, and moving into some better times. So that might be a time for you to look at. You know, right now is a good time to go talk to your financial advisor, but that would be another point at which you would say, hey, I see that the Feds are dropping rates. What's the right moves to make? Right. So from now to then, it's really a time where, you can sit there and say, hey, let me just make sure I am monitoring what's going on. I'm being smart with my money, not making any, foolish investments. And yeah, it, it's an interesting time, man. It's a very interesting time. But I think, what even more so, what I think the people want to know is, what does this mean for Web3? NFT and Jai, what are your thoughts about the impact on Web3? And I'm
Yeah.
gonna hand it back to you, and I gotta step out for 1 second. I'm gonna be right
Mm, mm, mm.
back.
Yeah, but in terms of the overall impacts to Web3, the quick and easy answer is all of the above, right? We're now in an environment where, as we see within the next few weeks to months, money isn't going to be as easily accessible in general. When it comes to going to your traditional financial institutions, we're going into a period in which they're going to like really tighten up the purse strings and have even more stringent requirements as it comes to just lending. In addition to that, what we're going to see, probably going to see, because oftentimes when we do have catastrophic events or more or even major crises, the government comes in order to make those regulations to ensure that something like this is prevented and that we have safeguards in place. What that means for Web3 is we're probably going to see even more of acceleration in terms of the upcoming regulation that is meant for the space when it comes to crypto assets. And then, of course, for the Web3 founder, we can't. If you're in Web3, you probably knew this already, but going to your traditional banks or financial institutions is going to become a little bit more difficult when it comes to securing financing or capital. However, that being said, we do have some additional takeaways that we want you to walk away with as the founders within the space. So, a couple of them being like, when it comes to choosing your financial institution that you want to bank with or patronize, you need to have a good understanding of their overall risk tolerance. So, what we mean by this is, if you're a Web3 founder, like beforehand, Silvergate may have seemed as a very promising institution to work with because it seemed as though they got it. They invested heavily into crypto assets. They were a huge financier within the space, right? However, there's always a flip side, right? You always have to ask yourself, is this institution themselves over leveraged within a space? And if they are, what is the viability of that space? Like, it does have a lot of risk to it or not? Just as you will want to assess your own personal risk, you want to assess the risk of those you work with, whether they're a supplier, a financial institution, what have you. And yes, it does take a lot of work in terms of looking at documentation, trying to get a sense of it. But when it comes to building your venture, it is critical that you know who you're working with. Because as we've seen with all of the collapses that happened within this month, it does have a significant impact to organizations and ventures. Another thing you want to think about is just also as you do that risk assessment on your institution you work with, try to do a stress test on your business, right? Or your project that you're working on. Think to yourself, okay, how diverse is my streams of capital? Like, am I only banking with one institution or do I have a good amount of organizations I can get funds from? And just ask yourself, okay, what happens if one of the wells dry up? Am I over leveraged in terms of my dependence on one organization? How do I diversify? How do I mitigate this risk? So definitely stress test yourself.
Yeah, it may even be good, especially on the Web3 front, just because some options may be limited, at least at this point in time, right? To look outside of the U.S., that may take a little bit more work, and you may have to do things that you wouldn't have to do in the U.S. Nothing weird, but just there's different laws
Yeah,
and regulations.
authorizations.
Right. But that may be one way where you're saying, all right, there's only, one or two banks in the US that are really, fund me on the Web3 side, but there may be a bank in, London or a bank in France, Abu Dhabi, that may be able to, give you some assurance that, hey, if one, uh, one bank something happens there, or one of like my like Entity and Dry said, one of the wells dry up. I got another well that got a little sprinkle for me. So yeah,
Exactly. And look at episode, let me see. It was episode, I want to say it was 28, but we talked about how in Abu Dhabi specifically, it was episode 26, excuse me. In episode 26, we talked about like how they, an organization out there came up with a $2 billion fund
doubling down.
specifically for Web3 organizations. So
Yeah,
similar to what Web3 Wayne just mentioned, you have to you have to be global with it, right? Look at these different markets and see if you can, really strive there, which
yeah.
we'll also talk about with the later stories. And also some a piece of advice we heard from a person who was in banking and actually a few different bankers is this going to have an impact for those who want to raise capital like VC money or what have you to to grow your venture? Yes, it will. However, I'm assuming if you're listening to this podcast, you're probably more so on the early stage part of that journey. It's not going to have a significant impact on the early stage side of the business cycle. So whether you're like a seed or a pre-seed, like you just have an idea, you're probably not going to see as much impact to the availability of funding there. This is more so for more at the later stages, like you're trying to raise a Series A, a Series B, like as you get to that pathway of growing a venture that could be acquired or have an IPO. And so, yes, it's going to be a lot more tough, but also remember this during times of economic decline and downturns, a lot of the most innovative projects come forth through the ashes. So that could be you. So definitely tighten up, protect yourself at all times, but be unafraid to still continue with your journey.
Well put. Well put. Definitely. It's interesting times that we're entering. We're gonna have to see how things shake out. From what I'm feeling right now. I watched a video of the Fed secretary who was just like, yeah, like everything has gone well with Credit Suisse, UBS's acquisition of Credit Suisse so far. And I was just like, so far, wait, what does that mean, right? And then I saw today, I think I saw that earlier today, and then before the podcast, I saw that UBS and Credit Suisse are both under some investigation, or are being probed by the government as well. So we don't know how many more dominoes are going to fall. To be
Mhm.
honest, right? We're not insiders of that nature. yet. I'll say, right. But one thing that you can do again is start to look outside of just the U.S. Right now, this is only a U.S. problem. Of course, we've seen some troubles in Europe as well, but still there are other economies that are not necessarily completely contingent on U.S. and U.S. policies and U.S. politics. So it may be good to look in other places. Which leads us to our quick take for today. Boop, boop, boop. Crypto firms are answering Hong Kong's call for Web3 leadership. We told y'all international may not be a bad move. Interesting as it's Hong Kong, but you have to do non-traditional things in times of economic uncertainty, right? And one thing that Hong Kong has been big on is becoming the main Web3 hub in Asia, right? So according to their Secretary for Financial Services and Treasury, Hong Kong is accelerating its goals to become a global crypto hub, and digital assets companies are sizing up the opportunities. This is a natural fit for a place like Hong Kong, which is already a global financial center. Now we add this new digital innovation to it, and it only makes sense that Hong Kong can play a leading role in the transition to Web3 for financial institutions. Last Monday, in a speech at the Aspen Digital Web3 Investment Summit in the East Asian Business Hub, Christopher Hui said that the city had received interest from over 80 companies wanting to set up in Hong Kong. That advice that we were just given is something that other companies are already exploring, and those being crypto exchanges, blockchain infrastructure companies, blockchain network security companies, virtual currency wallets, and payment companies, right? And so they've had challenges during the pandemic. Speaking of Hong Kong, right, of lockdowns and earlier regulatory crackdowns on Bitcoin and Bitcoin mining, which really deterred a lot of crypto startups, right? So they started backing away from Hong Kong, especially since China has more recently become even more heavily involved in Hong Kong in its politics. It's not as open and westernized as it once was, right? Even resulting in FTX leaving Hong Kong and heading to the Bahamas. That was a real reason that they decided to set up shop in the Bahamas, is because things weren't straightforward in terms of their regulatory framework in Hong Kong. It's really confusing, and so they say, hey, you know what? We'll go to the Bahamas, which I don't understand why they didn't do that from the jump, but hey, that's just me. That's just me. But since then, Hong Kong has kind of understood and answered the call, and really, opened themselves up to consultations and created new rules to give retail investors access to digital assets as well. So this is almost opened up the floodgate, especially with things that have gone on and their call for companies to come in. And last month, the FFC, the SFC, the Securities and Futures Commission of Hong Kong, proposed the city will allow all types of investors, including retail investors, to access trading services provided by a licensed VA or virtual asset trading platform operators. We is really looking forward to the future when he notes Web3, as it has the potential to enable more decentralized, efficient, and inclusive platform and create new opportunities for innovation, entrepreneurship, and social impact. And this is something similar that we heard and saw from the group out of Abu Dhabi with their fund, their $2 billion fund. We're seeing this now in Hong Kong. I think internationally, we're seeing a lot of those governments saying, "Hey, we know that right now is globally going to be interesting times, but this technology is the future, and we want to help you get ahead of the curve and stay in the ball game and lead us into the future." And with that, that is our quick take for today.
Fire, fire. There's an expression that's kind of popular that I even heard Floyd Mayweather say it in an interview. The earth is my turf.
Mm,
Meaning that you don't just stay super narrowed into your own domestic locality. You have to think globally because we're in a globalized economy. So it only makes
yeah,
sense that you set up in shops in different markets, right? Whether that's in Asia, Africa, Middle East, Latin America, what have you. So fire, quick take. And actually, shouldn't that one hit home for you? Like, I don't think the people know, like, you've been to China before, right?
I have, yeah. I mean, yeah, and that's why I said it makes so much sense for Hong Kong, man. When I went out there, I think, if you don't have that international experience, if you've never been to Hong Kong or really understand the international or global economy, you wouldn't even think of Hong Kong. I really didn't even know it was a place, to be honest, until I went there. I was also 18, 19 at the time, so really young, but Hong Kong is like the financial center of the East, to be honest. Listen, it makes New York look like Birmingham, Alabama. No shade to Birmingham, Alabama. But I'm saying in terms of sheer size and scale, and man, there's parts of New York where you can walk in like Brooklyn. There's like these nice brownstones. It has this nice character. Listen, Hong Kong is Manhattan times 1,000, if not a
Mm,
million. And a lot of global money is going flowing through Hong Kong, and a big reason for that too was it was the way into China for a long time.
mm,
Hong Kong had more westernized policies and practices. It was very much a democracy for a long time. Um, and China kind of let that be for a while. And if you're familiar with international news, there were some protests some years back,
mm,
I believe 2014, 2015, around that time frame. It was because China was cracking down a little bit more on Hong Kong and their practices and their policies. But still, Hong Kong has a lot of that same, flair to it. And so, yeah, I've been there. Did a summer business program out there. Went to a few other cities in East Asia. Um, so it's interesting to see what Hong Kong was then, and then right now, seeing this story, what Hong Kong is doing on the Web3, digital asset, financial innovation front.
mm.
I think they have a lot of appetite for risk. There's so much money flowing through there, Jesus, but they have a appetite for risk, and we're seeing that kind of play out here. I'm interested to see though what happens on the China side, right? Like,
Yeah.
how do they um, view this? How do they maybe deter some people from going to Hong Kong and taking advantage of this? Just because they know at some point they may have to be at the mercy of the Chinese government. But I think wherever you go, you're gonna have to deal with the government in some capacity. So it's really a pick your
Exactly.
poison type of situation.
It sounds like to me that Block to Block needs an episode on Hong Kong. We need to meet with one of these individuals who are big over in Web3 just to really get a firsthand. Going back to what you said before, we're not at the point yet when we have that insider access, but if you are able to like, comment, subscribe, and share with all your loved ones and share out this episode in particular, we can give y'all the inside scoop. I'm just saying.
Yes. Just saying, that's it. What I'm saying? Just mention it. Just put it out, and just in case,
Mm-hmm. Shoot,
let
y'all
them
can
know.
flip it up, just tag us, and yeah, let's make it happen.
Look, absolutely.
Yeah. The earth is my turf. And this is the theme for the rest of the episode because we're going to talk about how the European Union is looking to develop their own blockchain network. So
Hmm.
for those of you who may not be familiar, the European Union is the economic regional bloc over in Europe. It has 27 member countries such as France, Belgium, Luxembourg, Portugal, and all these type of European countries, and they come together in order to create regulatory and economic frameworks so they can better be more cohesive, have the movement of people, money, transport supplies, and everything else of that nature. So the EU is huge and is one of the biggest economic blocks in the world. And what they're trying to decide to do is next month they want to vote on making their proposed markets in crypto assets legislation or MiCA law for the region. And so let's take a step back. The minister, the digital minister of the EU said the European Union needs its own blockchain for digital payments and smart contracts that would rival existing networks such as Ethereum, right? And some of the intended use cases that they want to have their own blockchain for is to record property ownership, driver licenses, professional qualifications, right? This blockchain will really focus on serving gov tech, like technology for government, public services, and supply chain management. Because as you know, the government is really responsible for many, many functions. And it's the same wherever you go, really, when it comes to the government. Oftentimes, the public sector is a lot slower moving than the private sector. And so things such as all these technological integrations that we're used to in like the private sector or in our personal lives, they're 10 steps behind in terms of like that adoption. Derek shaking his head. Like I had an internship with a local municipality, or two local municipalities actually. You used to work in public finance, so we both know from personal experience when it comes to tech, there's usually that misalignment with the government. So that's why it's very instrumental and important that the EU is looking to make this MiCA framework into law. And so if it is, right now they already uh, technically agreed upon it, right? With like 27 nation states, member nations, like working on the documentation, composing this 400-page text or law, but they just have to officially vote on it or sign off on it next month in April so that it can go up to the EU's governing council. And with this, Mika will create a common licensing regime for crypto wallets and exchanging and just really all things Web3 within the EU. And so, just to break down the broad categories that the Mika legislation covers, first, it gives a clear classification and definition of crypto assets. So, there's definitions such as what's a utility token, what's an asset reference token, what are e-money tokens? All of this, which helps to define more appropriate regulatory treatment for each token class. Two, they set rules for the issuance and trading of crypto assets. So, stating that if you're somebody who wants to create your own cryptocurrency project with your own token and you want to launch it within like this European market, you know, they have they have rules now. They're saying like you need to have a detailed white paper about the token and the potential risk, and you need to register with the appropriate national authorities. So no more fly by night type stuff. Three, they have licensing requirements for crypto asset services providers or CASPs. So these are like your wallet providers or your exchanges or your organizations that have like custodial accounts. These types of organizations will need authorization to operate in the EU, and they have to adhere to the EU's anti-money laundering and counterterrorism financing regulations and other standards. Next, there will be rules to prevent market abuse and manipulations. So things such as inside trading and front running, as we know, the unfortunate crypto market to do when they'll have these fugazi tokens and then they'll just run off with everybody's money. That this mandate is going to like try to put a stop to that to ensure that these casts that we just talked about are being very transparent and they have many disclosures so they can operate. Consumer and investor protection safeguards. This is huge. So there's going to be requirements to make sure that they segregate out consumer assets, that there's mandatory insurance or similar guarantees within these CASP organizations, and there's clear communication about the associated risk with particular crypto assets. And then finally, supervision and enforcement. It's made easier for national authorities to just follow a single rule book for that entire EU market. So there's consistency across the board within this market. And so a lot of great things that the legislation is attempting to do. Now, I do want to talk about some potential downsides that are like brought up by Dr. Finlow Bates, who's a blockchain researcher and founder of ChainFrog. And it really goes back to just the nature of the public sector, right? So the EU wants to create their own separate blockchain network that competes with like a Ethereum or competes with a Cardano. So to make such a thing from scratch, it takes a lot of investment. You need to have the top-notch developers who are able to, just create and agree upon the consensus mechanism. Make sure you have your nodes in place. They gotta make all these smart contracts. They gotta, and even just the overall plan of how the blockchain is going to evolve, right? Like if you look at a Cardano or Ethereum, they all have like multi-year long plans on how these blockchain networks will evolve because they know, hey, it's not quite up to par in this standard, but we're going to have a plan to address this within a couple years here and so on and so forth, which we talked about in previous episodes with like the merge. So it's a lot of investment that goes to creating a blockchain network from scratch. In order to do so, you need to have the best developers, and those developers are not cheap, right? And unfortunately, what happens is with a lot of these governmental organizations and in the EU, they have like a tendering system that they use for like securing contracts. And what happens is these contracts don't attract the best talent because one, the pay usually is way too low because public organizations have very tight budgets, and two, unfortunately, not a lot of people can stomach the patience that you need to work with public organizations for good reason. They're very bureaucratic and have a lot of red tape because with a public organization you have to ensure that you're being a good fiduciary, for lack of a better term, of the people's tax dollars, right? And so there's a lot of red tape and it's not as speedy, especially in a world such as Web3 when everything is speedy, right? So it's a situation in which if the EU is dead set on trying to have its own net new, brand new scratch blockchain, it's going to be difficult to attract the right amount of talent and keep that ecosystem alive and active to build it out. One recommendation that was noted was it's probably better to build the blockchain on top of an existing blockchain, kind of like how Polygon did to Ethereum, if you will, because then you'll have access to already established ecosystem of developers who can like help with your project. But aside from that, nonetheless, it is a very interesting regulation, and it could, if passed, it would provide the first multinational regulatory framework for crypto and digital assets. So similar to Web3 Wayne of how he went to Hong Kong and like been over there in the East and saw how these business institutions worked. I had the pleasure of in my undergrad year to actually visit EU institutions within Belgium, France, and Luxembourg, right? And we went to like many different EU organizations and we got a sense of really how they go about thinking about policy and just the overall health or stability of the European Union. And one thing that is to note is the EU is known for having a lot more stringent restrictions than other markets, right? Especially when you compare it to the US. Like for example, a lot of the food that we eat here in the United States wouldn't fly in the EU because of all the standards that they have in place. Or when it comes to data protection, they have a lot more strict regulations when it comes to consumer data and how do you mine and what you can do with that than we have here in the United States. So with that in mind, the way you do one thing is the way you do everything. How is that going to play out when it comes to the EU's proposed blockchain, which they want to call Europeum, by the way, if I'm pronouncing that right? So very, very interesting because as you can see with the Mika breakdown that I gave you, it has all of these different frameworks that it wants to account for to ensure the protection of European citizens. And, you know, there's a lot more requirements if you're a project or a company in Web3 that wants to operate in that market if
Yeah.
this framework gets passed. So, just a couple of takeaways though. You know, this could be a domino effect for other regions or other governments because similar to like how in the venture capital world there's like this FOMO with government when we see one state or one governmental organization do something and it's successful, other governments try to copy and like customize it to their region because hey, you already have the framework, right? Another thing that's important to note is, as we said in previous episodes, just because these governments may have spokespersons that will like bash crypto or crypto assets on the news, don't think they're not paying attention or asking themselves how they can utilize blockchain technology or crypto assets or what have you for their own purposes, right? Like we've seen this with different governments saying they want to have central bank digital coins instead of the regular private coins like your Bitcoin or Ethereum's running around. And as we can see, one of the largest regional blocks in the world is trying to have their own blockchain that can compete with Ethereum. Let
Hmm.
that happen.
Hmm.
Also, going back to if the earth is your turf, if you want to operate in Europe, yes, it's true they tend to have much stricter regulations than most other regions. However, that's also a positive because if you can successfully operate and flourish in that market, and they have like the highest of standards, that means in any other market you go into, your safeguards are already going to be at such a high level that you're going to probably surpass your competition, whether that's in the Caribbean, Latin America, Africa, Asia, what have you. And so, yes, it will be challenging, especially if this gets passed and they have all of these rules that come out. Gotta pay attention, but it could be an opportunity that can set you up for success in the long term. And that's essentially it, man. This is a global episode. One of the largest economic blocks in the world is trying to make their own blockchain.
Yeah.
That should tell you
From block to block.
that this technology is here to stay and it's something you should pay attention to.
Absolutely. Absolutely. Yeah, and I think like you said, the domino effect, what does that look like? Right? What
Mhm.
does that domino effect look like? Um, so the earth is your turf. If you feel like you're playing a little bit riskier ball and you don't want to deal with the EU, you got to go look at those markets that's gonna let you do that because the EU is doing it. You probably see something probably a little less restrictive with the US, but something very similar coming behind the EU. And a lot of these other regions as well probably will follow suit and use a lot of parts and pieces. So interested to see how this plays out for sure.
Absolutely, absolutely. Man, great episode, action pack episode, so much
Yeah,
content. But there's
man.
more. Web3 Wayne, let the people know what we got going on.
Oh man, you put me on the spot. But good people, we'll be remiss if we didn't invite you to come sip, paint, and NFT with us out here in DC on April 8th. We have an event from 1 p.m. to 4 p.m. A great event that we're doing in collaboration with Abstract by Alexi, a great artist out here in DC that's venturing into Web3, and how she can bring her physical creations into Web3. Something that she does a lot is her sipping paints or paint sips, whatever you want to call it. So we are partnering with her as well as Zate Knight, who will be curating the experience for the night. Trust me, you will not want to miss. Bring yourself, bring your girlfriends, bring your girlfriend or boyfriend, whoever it may be. Definitely come pull up Saturday, April 8th, 1 p.m. to 4 p.m. Complimentary drinks on the house, as well as you will get the ability to gain an NFT, maybe for the free. You never know. You got to come and see. And this is the first of many of our outside events that will be going on over the next few months. Make sure you stay tuned and make sure you are following us at Relink Global, at the Timbucktoo, and be on the lookout because a lot of great things are coming your way.
Yep. That link will be in the description below. Once again, make sure you like, comment, subscribe, and share out with all your loved ones. If you're listening on an audio platform, please give us that 5-star review and share it out as well so we can continue to grow out this podcast and share this information with all those who seek to benefit and utilize this technology. So it has been a pleasure. It's been a fire episode. I appreciate you guys for tuning in. Remember, the earth is your turf. Think global, think big, and don't be afraid to chase out this opportunity. It is I, NFT and Jai. Peace.
And I am Web3 Wayne, and we are out of here. Weezy out of here.